You're a merchant. It's 1750 BC. You're standing in the dust outside a city called Babylon, watching 12 donkeys get loaded with everything you own. Wool, copper, oils, things you've spent years building up. The caravan is about to leave for a market 200 miles away across open desert. The donkeys might die. The drivers might run. The whole thing might get hit by bandits before sundown. And if any of that happens, you are finished, wiped out, done. There is no second caravan waiting in the wings. There is no backup. There is just this one shot, this one road, and this one absolutely terrifying afternoon. So you do something a little weird. Before the caravan leaves, you walk over to a guy with a stone tablet, and you make a deal. You borrow money, a lot of it. But this loan is strange. It has a clause. If the caravan arrives safely, you pay back the loan with a big chunk of interest. If the caravan gets robbed or destroyed, you don't owe anything. The debt vanishes. The lender eats the loss. You eat the embarrassment, but you still have your shirt. Congratulations! You have just participated in what historians believe is one of the oldest insurance contracts in human history. This is the story of how ancient humans invented insurance. And it is way older than you think. The answer to that question takes us 4,000 years back, to a kingdom that no longer exists, in a language nobody has spoken in over 1,000 years, written on a piece of rock that is still sitting in a museum in Paris. And once you understand how it worked, you will never look at your monthly insurance bill the same way again. Let's talk about why insurance had to exist in the first place. Long before anyone was insuring cars or houses or dogs, the original problem insurance was invented to solve was trade. Specifically, the problem of moving valuable stuff across long distances without dying or getting robbed in the process. Around 4,000 years ago, the Mesopotamian region, which is roughly modern-day Iraq, was the center of the global trading universe. Cities like Babylon were enormous by ancient standards. Merchants moved goods across hundreds of miles using donkey caravans and riverboats. The economy depended on this trade, but every single shipment was a gamble, a really bad gamble. If your caravan disappeared, you didn't just lose the goods. You lost your savings, your family's future, often your freedom, because in the ancient world, a bankrupt merchant could be sold into slavery to pay off debts. The stakes were total. And humans, being humans, started looking for a way out. Here's where things get genuinely fascinating. Around the year 1750 BC, a Babylonian king named Hammurabi did something kind of incredible. He wrote down the laws, all of them. 282 of them carved into a giant stone column over 7 feet tall, written in a language called Akkadian, in a wedge-shaped script called cuneiform. That stone, called the Code of Hammurabi, was rediscovered in 1901 by French archaeologists in what is now Iran. Today it sits in the Louvre Museum in Paris, and you can walk right up to it. Most people know the Code of Hammurabi because of the famous phrase, an eye for an eye. That actually comes from this stone. But buried inside those 282 laws is something almost nobody talks about. Hammurabi wrote the first known insurance regulations in human history. Honestly, kind of underrated. Specifically, the code allowed merchants to take out a special kind of loan to fund their caravans. The loan was structured exactly like the deal I described at the top of this video. If the goods arrived safely, the merchant paid the loan back with high interest. If the goods were lost to robbery or disaster, the loan was cancelled. Just gone. The lender absorbed the loss. That arrangement has a name. It is called bottomry. and it is the direct ancestor of every shipping insurance policy that has ever existed since. Now here's where things get really interesting. Hammurabi's Code was not the only place this idea showed up. At roughly the same time, on the other side of the world, Chinese merchants were inventing a completely different version of the same idea. Chinese traders moving cargo down dangerous river rapids had a problem. If a boat capsized, they lost everything. So somebody, somewhere, looked at that problem and came up with a brilliant solution. Don't put all your cargo on one boat. Split it. Spread the same shipment across multiple boats from multiple owners. Now, if one boat sinks, you only lose a fraction. Everybody else stays in business. That, right there, is the core mathematical principle behind all modern insurance. Spread the risk. Don't let one bad event destroy one person. Let many people share a small piece of many bad events. Think about that for a second. Two completely different civilizations, separated by thousands of miles and no contact, both figured out the same basic idea around the same time. That tells you something important. Insurance is not an invention in the way a wheel is an invention. It is a discovery. The math of risk has been sitting there the whole time, waiting for humans to be desperate enough and organized enough to use it. Babylon used contracts. China used logistics. Same idea, different costumes. Let's talk about why this still matters today. Every single thing you insure right now traces back to this moment. When you pay your monthly premium for your car, you are doing what that Babylonian merchant did, just smoother and faster. You are paying a small, predictable amount now so that one huge, unpredictable disaster later doesn't destroy you. That is the entire concept. It has not changed in 4,000 years. The tools have changed. The math has gotten better. Edmund Halley, the same guy the comet is named after, figured out mortality tables in 1693, which turned insurance from gambling into science. Lloyd's of London turned it into a global industry in the late 1600s. But the underlying idea, the thing the whole multi-trillion-dollar global insurance industry is built on, was already there in 1750 BC, written on a stone in a language nobody speaks anymore. The donkeys are gone. The caravans are gone. The stone is in a museum. The idea is still here. So the next time you pay your car insurance, your renter's insurance, your pet insurance, your life insurance, your health insurance, your phone protection plan, your extended warranty on a blender, you are doing what a merchant in Babylon did 4,000 years ago. You are looking at a future that might destroy you, and you are paying someone today to absorb the hit if it does. That merchant did not have a phone, a calculator, or a single piece of paper. He had a stone tablet, a handful of donkeys, and an idea that turned out to be one of the most durable inventions in human history. You are using the same idea. He would recognize it instantly. Here's the part that is genuinely wild when you stop and think about it. Insurance is older than the alphabet in most of the world. It is older than money as we know it. It is older than the Roman Empire, the Great Wall of China, the pyramids of Giza, by enough that the gap is hard to picture. People did not invent insurance because they were brilliant. They invented it because they were scared. They were scared of losing everything. They were scared of starting over. They were scared of one bad afternoon erasing 20 good years. Sound familiar? It should. Because that fear has not changed. The technology has changed. The cities have changed. The languages have changed. The fear is exactly the same. A guy in Babylon in 1750 BC, lying awake at night worrying about a donkey caravan, is feeling the same thing you feel when you check the deductible on your homeowner's policy. The species has not moved on from that feeling. We have just gotten better at managing it, and maybe that is the real story here. Insurance is not a financial product. It is a 4,000-year-old answer to one of the oldest human questions. What happens to me if everything goes wrong? Somewhere, somehow, in a city that no longer exists, someone wrote down the first version of the answer. We are still living inside that answer today. The donkeys are dust. The stone is in a museum. The idea is in your wallet.